Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for September 26th, 2023. It's important to note that today, in our market classification system, the market goes back into sideways normal after having had a nice long run in bullish conditions. So we're back within 2% of the 200-day moving average, which combined as a result of that little sell-off we had, creates a significant compound critical state. So this favors short-term tactical trades, suggests an increase in volatility would not be unusual. Sharp moves in either direction with little follow-through day to day. So less emphasis on swing trading and holding overnight and for longer periods of time, and more concern about tactical trading opportunities. And a bird in the hand is worth two in the bush, we would say. All right, so as usual, we'll start with Alcoa on the 30-minute chart with a hybrid swing pattern. So yesterday's little swing trade, which was routine, and took the dragon exit, it continued to sell off. Today, the selling continued. It broke below yesterday's RL10, so we initiated the short, put a standard risk box on it. It started to decay a little bit, and at the end of the day, I elected to just take the dragon exit. After about 2 hours of no further failure, I took the dragon exit for about just a little under 2R. This would be sort of a natural place to see a sideways movement continue, followed by an SSC opportunity to the upside. Or if today's flirting with the 200-day moving average leads to a collapsing dragon, we want to be all on board on the collapsing dragon. So Alcoa is perfectly postured to express both of those ideas. We've had 2 solid days of sell-off. This was 2 days of sideways, and then 1 day of sell-off. So a move in either direction would not be unusual. If it could be less non-committal than that, I don't know. AI, there was a short that was available in here. It didn't take it. This was a collapsing dragon somewhere in here with the risk box there. You'd have done fine with that, and it closed poorly. So that one's on the radar for tomorrow. Amazon initiated the short on the gap down. This closed here, gap down to here, and started selling off. I front run that collapsing dragon a bit. Tight risk. Second leg is down, so we're holding about 3R on that one. And this will be an indicator for tomorrow. If this is a buy on dip opportunity, I will try to preserve as much of that as I can, but I would look to add a position here. The news in Amazon has been negative. People, government's trying to tax them a little bit, and so the Fed's suing them. So, this is a 15% sell-off right here. So this is either Amazon on sale or the start of something really nasty. Caterpillar initiated the collapsing dragon short right here. It's rolled over, and we're about 90 minutes in. I want you to notice that on these 30-minute bars, it's normal for me to wait 60 to 90 minutes to see the shape of the day. Like this one waited till about the third bar in, about the 90th minute, when summer had turned to fall and then quickly into winter for the shape of the day. So when we look at George's charts later today, I'm going to make that point again. But this is holding about 2R in Caterpillar. And when a company that is that good is suffering, then that's an indicator. Cliff, so this has really been swinging nicely. I mean, look at the size of these moves. Here's 2 legs up. So this was the nice 3-position long where we got out at, we took a half there and a half the next day just in case there was a follow through. But today it started selling, so we took the second half off. That closes out this trade. And then it couldn't make new highs, and it just rolled over and gave us a PSAR flip, and the whole market was getting weak here. And this looks like profit preservation against that good profit. And we'll see tomorrow. If it gets below 1460, makes a new low, like violates today's low, then there's good reason to believe it comes all the way back to 1420. If we want to believe in rising lows, we might just draw a line like that and say it could still preserve the upward trend that you're getting from this as long as it stays above 1450. I don't disagree with that, but I want to be short about 1465, and that's a 1% move down to 1450. And then if 1450 cracks, then it feels like this move down to 1410. So that'll be an interesting one tomorrow. CVS initiated short. So this was that reversal we'd been teasing yesterday and didn't take it. You can see how gappy this is. It gapped down to here and started that sell-off, so we had the nice wide standard risk box. Took it short, and it closed poorly at the low of the day, and it's already below this whole collapsing dragon compound. I would take that as a collapsing dragon too. So now the next target then is I just take the midpoint of that congestion, draw it straight across. So a move down to about 70, 80 would not be unusual. So that's about a 60-cent move. And this is about a 50-cent risk box. And if this breaks, then the statistically significant support level is down here. So you can actually get a move down to here tomorrow. That would not be unusual. So Clip or CVS, we're holding that one overnight. Dish, collapsing dragon from a long series of sell-offs here. Stabilized, fell, stabilized. Today it fell again. So when it breaks below this collapsing dragon, and remember, it's the belly of the RL10 and the PSAR. When that violates, I'm on it. Like, I'm not waiting for the low of this price tail because the statistically significant break point is here, so I can get short right away. And again, we're about 90 minutes in. And then there's your standard risk box. That's the same risk that we're taking based on stats on every one of these trades. Standard risk. And all it did was collapse and close poorly. And that's probably 4R. And more to follow. Like Dish Network is such a niche company that it's not holding anything up. So that's just individuals bailing on Dish. Devon Energy covered the long for about a half an hour. This was setting up a little kind of Kata 2 collapsing dragon. I'll be ready for that to fail tomorrow. I just looked at this as a strong support level, and it didn't look like there was enough reward in here to justify the short. But if it breaks below 46.50 tomorrow, then that one feels like a strong short. If we saw a really strong energy sector tomorrow, starting with the futures, I could see getting long north of 47.50. So this is a pure zero state tactical play, ready to go strong in either direction. No sense taking overnight risk on that one, as vulnerable as that is to oil. Next, Electronic Arts. There was a collapsing dragon twice on that one. That's going to be weak tomorrow, but no trade for me. Again, we see in emerging markets how gappy this thing can be. And today there was the gap, and it had gapped already down to the collapsing dragon, so that was worth a shot. And it closed poorly, sympathetic to weakness in the U.S., and so that's holding 2R. And I'll be watching that closely to see if I can capitalize on another gap down. That would be nice. That would be helpful. Ethereum continues its slide. Mexico, yesterday's gap and drop, which closed here, and we were holding a comfortable 3R. Continue to fail about 45 minutes in, add a second position when there's no sign of buying pressure, and that thing closes poorly. So we get another 2R on this position and 2R on that position. So we're holding 7R on two positions, and no support anywhere to be seen in Mexico. So let's see if we go way out on this one. Yeah, there's no support in Mudville. That's pretty... Man, this thing could really drop. Let's, if you can tolerate a few minutes of looking at the daily. Yeah, this thing has already violated all of that support. So now it's back into this channel. It's now sitting on the top of this channel, which means that a return to the midpoint of that channel takes us down to 57, and a return to the support level, the absolute support, to 54. So watch, this thing could really be painful. And if 54 breaks, holy mackerel, 51. This is just starting to get into the winter, too. That's not good. I mean, I like being short. It's not much better in Brazil. You know, we're at that support level. Boy, is that ever crucial. If that fails, then 29, 27.50, 26, all of that is in play. The only saving grace on this one is that, you know, you got a bit of, if it could hold support here, that's pretty weak sauce, though. But that's going to really be a significant test tomorrow. This is really a significant test. I mean, the whole market is in that condition, just going into sideways. But boy, is this ever... That was the start of something nice here. That whole optimism has all just disappeared. So here we are at the test. Volatility rising. Intel, another big collapse. The bellwethers are all getting murdered. If that breaks, 29 is in play. If that breaks, 25 is in play. From this price level, though, there have been two pretty good moves up, but this doesn't have a strong market to rest upon. We're going to have to see some really serious buying at SPY and the Qs and semiconductors to be in support of this as a support level. If it does, hey, great, this is going to be the mother of all good entries. But that's whistling past the graveyard. IP, on the other hand, well, let's. I should probably go back and look at the 30-minute, eh? Because we do have. Yesterday we closed. Oops, that's IP. Sorry. Here's Intel. Covered the long on this one. The failure to take off from here. There was a little bit of buying pressure, but then reality set in. So we scratched that, and this is ready to collapse tomorrow. IP is one of the few bright spots in the industrials, but we cashed the bird in the hand yesterday at the edge of the that's why we take that dragon exit. And then today it gapped down to here, monkeyed around, and then the daily move showed up. This is why I like to wait that 90 minutes. Call it 60 to 90. Let that move unfold a little bit and then pick it up. In that sense, it is very much like a slow frog, which waits 60 minutes before it makes its move. You give up some of that early volatility, but if you're trading 30-minute bars, the early volatility you want to trade off at 3 minutes anyway. So this has some real weakness baked into the cake tomorrow. Excuse me. Real estate, gap and drop. The whole bottom has just fallen out of that thing. That's almost a insulation against the long side, and that made it an easy, short, standard risk. Nothing but selling, holding 2R overnight. Is running buddy. Regional banks. We had a 3-position long on this one, which, 2-position from yesterday. It started moving up today, and I said, I'll add to that. It came back. I exited the whole position. Did not have the willpower or the span of control to play that one, but boy, did that ever get smashed. So I'm looking for a continuation tomorrow. As soon as it breaks below 41, I'm short on that one because that's a double bottom that would be failing. And I'll tell you, everybody that took advantage of the buy on sale is out of that position. Mattel. Yesterday we took the bite-sized snack. Today it rolled over. That's a lower high. Now that feels like a collapsing dragon. I waited for it to break below the PSAR and took the PSAR flip south with a nice wide standard risk. And that's holding about 1.5R and more failure coming. That's just getting pulled down by the broad market. I took the collapsing dragon gift in McDonald's for about 2R. Merck, no trade. Microsoft. I tried the long on this one in the morning and failed for 1R. Took the revenge trade at the edge of the dragon for 2R. So that's -1, that's +2. So that nets +1. The only saving grace on this one was the last minute buying pressure in the last 30 minutes. We'll see if that's a signal. Remember, it did that yesterday too, and that's what lured me in to that position. I remember now, we took that one in the last half hour yesterday because of that failure to fail further, and they caught me for an R. Not today, though. Marijuana, there was a short trade in that one, but I didn't take it. Nvidia, there was weakness there, but span of control. Clean energy initiated the short on a collapsing dragon. It's holding about an R. Rivian. So yesterday, we identified that after this long, painful sell and one little piece of buying pressure, we said, hey, this was setting up as a compound critical state with either a COTA 2 long or a collapsing dragon in here, or a supported fall crossing short. It gave the gap up and continued above the RL10, so I bought the emerging dragon with standard risk. Because the whole market was weak, I got out of that one here, which was a little bit in front of the, if you look at the skin of the dragon and the dragon itself, is I got out of that one a little bit higher than where the dragon exit would be, but I wanted to preserve gains on the long side in a market that was selling off. So we'll see what Rivian's got tomorrow. It was able to hold most of that and stabilize pretty nicely in here, north of 22. As long as that's north of 22, I think there's, I would reward buying pressure to the upside. You can see in the S&P that the slide continues. There was nothing happy today. Treasuries continue to collapse. Tesla, I exited the long at a scratch. It did not get punished much today, so there's two symbols that were less gloomy than the broader market, and that is Microsoft's and Tesla. And that's the two, champions of the world. Amazon's got some problems, but, if there's strength tomorrow in buying, that's where I would first expect to see it. U.S. Steel, I saw the rollover here. We had that one from a couple days ago. No trade yesterday, and today it started rolling over. Gave me the PSAR flip. Market was weak, so we took that short, and it just collapsed. There was probably a 2R battle drill second position available here. Span of control issues. And I wanted to hold this one overnight, so I only wanted to have the one position on anyway. But this one exited here, and that's holding about 3R of cushion, so I kind of like that one. I want to go back and, we're going to look at the sniper trade of the day here. We're going to look at Rivian, I believe it is. Yeah. So this is a sniper trade of the day, but it's on 30-minute charts. So this was the opening today, and today's range is this yellow box. So this is the open, and we know that Rivian is deeply in play because of this harsh sell-off, and then the size of these early spikes of volatility. That guy's jockeying for position. And we know it's in play because there was a strong, solid move to the downside. And in the last hour, 2 days ago, you had this giant closing bar, which represented a lot of reversals, and then that continued up and down. So this thing is in play. It is just as volatile as it can be. And so we identified this yesterday as a compound critical state, and we were going to be ready to trade that south with a second position if it broke below here, or ready to get long if it could break north of the RL10. Well, today it gapped up and continued up, so in that first hour, I'm long here with the standard risk. That's the same standard risk. This thing runs up all the way to here. It makes a peak right here, and then it gives me three soldiers marching, three lower lows, three lower highs. That was enough to get out right there. I had seen enough. I wasn't going to wait for the the edge of the dragon. That was enough. I wanted to preserve that extra little piece. So that was just a routine exit of cashing about 2R. I feel really good on that trade. I felt very, very professional because we'd found something that was in play for reasons on multiple time frames. We exercised discipline in the PSAR flip or the compound critical state yesterday. We'd identified a PSAR flip after a really long and successful short side trade. So we knew this had a lot of potential. And so we were disciplined about not chasing it. And then when it closed right in the middle of yesterday's range, that made it a perfect compound critical state. And again, it was ready to go in either direction. So I'm proud of the professionalism on that trade. Sniper trade of the day. The traders. So here's red. And there's his OR3 and a PSAR flip. Crushes it, second position. Tried a third one. Quick exit for 5.36R. Here's your consolidation. Here is your collapsing dragon. There's another 5R in there. This was late on the PSAR flip. He gets, probably was chasing it here and gets out with a, he bought 3 and 3, or bought 3 and 1. So, a little too fast on that second position. But then holds support at the edge of the dragon, continues, takes out the peak of the RL10 there. That's an emerging dragon re-entry. And this doesn't fail until it gets all the way back to the previous support level. But a nice series. I like the, this is sort of normal chop. Sees the PSAR flip. Maybe waits a bar light for the extra confirmation. I think this is premature because you're still above this strong support level. I think I'd be waiting for that before I added. But you got out of it quick, so that's all right. So net positive on the hogs. Where's my OR3, man? Oh, he just couldn't get filled. He had the signal going and he didn't get filled. Got the second leg down. There just wasn't much there. Darn. Brian Lancaster. Ladies and gentlemen of the jury. He's got leg down, PSAR holds, so he crushes that. 1, 2, 3 exit and a dragon exit for 2.5. He stopped and reversed because that's a 1, 2, 3 entry. And because why not? Because if this fails, he's going to be short here anyway, and he's only really risking 0.5, and he smashes that. Again, takes the dragon exit. Notice the bends in the dragon. They're key. When you have a strong trend in one direction, the RL10 pulls away from the dragon. So this is a 10-period regression line, and the middle of the dragon is a simple moving 10. So when you have a directional move, the regression line is always on the side of the trend. So when that bottoms out, the way the RL10 bottoms out with a V, you got the skin of the dragon, the spine of the dragon, and the far side of the dragon. There's your exit and your entry in the other direction. So here's your RL10. That little envelope is your upward momentum. And when that rolls over, you're out. And I love that you didn't chase. Perfectly symmetrical. And if you looked on a longer time frame, price just was here, there was a blip down and up, and price is here to say, hey, that's just noise. Yeah, noise can be tradable. Just remember it's noise, so you're not believing in fundamentals. You're sensitive to your environment. Let's see, Hamad. OR3 gets paid. Maybe a bar late on the entry. We should try to get out here because this is supposed to go. And if it's really going to go, it has to get above this right away. So when that doesn't even do that, then we could be short here, although that's a good short. I like the exit. I love the re-entry and cover, and I'm looking for the extra re-entry here. When this doesn't follow through at all, maybe that is your entry instead of here. And then that's a good exit. So we were close. You got to look for the disconfirming evidence too. Failure to follow through, failure to fail further, that kind of stuff. Caterpillar, mostly chop, and he scratched. I think this last one was a reasonable entry. You wanted to stay out of this chop. You waited to see this break. On a perfect day, maybe we could get that. That looks like a fake one. Go to. Caterpillar's never going to be as jumpy as the other, like the semis. It's just too big, fat, and boring. When this rolls over, here we are. Boy, I sure would like to be able to get that move. I like getting paid. I like this one getting paid. I like that you didn't chase. But I gotta believe that if we see this somewhere around in here, maybe we can get that second leg of that. McDonald's, yeah, he identifies the didn't re-enter because the RL30 was below price. Yeah, that's when the 30 is that bad, that is the health of the trend. So that means that this little blip is nothing, that it wants to get back to the 30. So RL30 below price is not a reason not to get in. It just says that we've got a strong downward trend. And, we're just in the spring. And the RL10 and the Dragon have already rolled over. They've rolled over in the spring, and that's a collapsing Dragon. So I think you got to get short on that one. That's more important than where the slope of the RL30 is down, and it's out of the river, I would expect. So I think you got to stay with it. Microsoft, probably too tight of a stop in here. when this rolls over, I think that's the ideal entry. I like this one. I like the re-entry. Maybe an effort to get a second position on too fast. But I think that should be maybe one trade. I like this one. When that doesn't work, I'd like to be short here and scratch. Then I notice I'm in the chop. You pretty much stayed out of that. That didn't cost you much. And then there just wasn't much left. So I think maybe slightly wider stop in there. Intel. This one really stood out on the 30-minute as well. When you see this huge move up and then it can't hold and then it starts rolling over again, that's this whole thing, and that makes this one of those two. Good job staying out of the chop. I love this one. I love the re-entry. I think you wanted to get paid enough to cover that one, but another 2 minutes, we'd have a 0.5 hour win. They all look the same. Nice orderly trading on the forex. Look how nice and smooth that is. And look how good the 30-minute, that little collapse, and then it recovers to here. That looks like a bottoming tail then. An exhaustion sell-off with large range that reverses intra-bar, and that means you're able to crush that one, which is this one. And then there's a re-entry here. So good work on the Aussie. George, this is as nice as can be. He was short here yesterday. It gapped down and then reversed. He takes the 1, 2, 3 exit, gets 1.7. When you see this roll over and reject, there's your collapsing dragon. And there's your trade with an exit right about there on the reversal after the little sharp RL10 reversal. And again, on these two, I think give it 30 minutes before you start chasing. Although, there's nothing wrong with a scratch trade. Because if you do take that early and it collapses and you look like a genius because it'll come down to here, but it didn't cost you anything, so keep firing. And then the same thing on this one. At some point, we were in almost a half an hour in hand and let that go negative. And again, I think if you wait that 30 minutes, give that a chance to unwind and unfold, I think you'll be in good shape. All right, that's everything we got for today. I do want to just notice a few things on the daily chart, or a daily report while we're here. Let's see if we can't call that up. There's a lot of indicators on here that tell us what kind of weather we're having in the market, right? Let's see. Oops. All right, there's our sniper trade. So I just want to here's the 150-day look back to here. There's your 150-day low, 150-day high. Now notice we've got one pause, 2 legs down. So this whole thing was telling us that this was a COTA 2 and that we could be short inside that PSAR flip, and then confirmed when 436 did not hold. And it's halfway down to that next support level down here around 416. So we talked about that this weekend, that it could drop all the way to here. It has dropped halfway in 2 days, and making a new 30-day low and a 10-day low in that process. Okay. You can see today just a continuing slide, pushing the boundaries on the 5, 10, and 30-day lows. 416 is the next support level. So anything below 425, short side bias. The 30-minute continued the slide and closed poorly. So we will notice now that the market has moved from bullish normal down to sideways normal, which means that if that's the 200-day moving average, we put a 2% band. That's about a weekly ATR. There's a plus 2%, minus 2% band around that. And then that's when price is in that range, that makes it sideways. And what sideways means is that there's historically, there's been an equal probability that tomorrow closes higher or lower. There's no statistical edge in either direction. So in terms of prediction, sideways, and nobody can know what to make. Even though the price has been declining to get into that band, we still call it sideways because the 1-day move probability tomorrow is purely sideways. And you can see we're at 1.74% above the 200-day moving average. But now notice the importance of that risk Z, which gave us the peak right where we would expect the peak. And then at the test of the 0 line, it is collapsing, and it doesn't get abnormal till it gets past -1. So a move down to 416 is not abnormal. And because we're below the 0 line, risk off is indicated. Now we've got the U.S. indexes that are firing on the buy on dip mechanical systems, along with emerging markets on the channeling. But then notice we got Intel, Microsoft, Home Depot, Nucor Steel, 3M. That's the great companies are getting murdered. This should tell you everything. If you didn't already know we were in trouble, everything's testing out well. Lots of 5DDs, plenty of new range breakdowns, new 10-day lows, 1-month lows, 3-month lows, even a couple 6-month lows in Coca-Cola on sale. Look at that. That's horrible. And Pfizer and Texas Instruments. I guess I got to become interested in Coca-Cola now. Warren Buffett probably getting ready to buy more. Even more compelling in the ETFs, look at all of the world going down together. So when the market is climbing, what you get is a differentiation in performance. That money starts chasing the winners and it starts leaving the losers. It's rotating, and that's what gives you a very wide separation in performance. But when the market itself springs a leak and is all collapsing, these correlations move towards 1.0. They all go down together. And that's what this is looking like. and that's why everything is significantly below its 10-period moving average, with only very few exceptions. Oil and uranium, lithium and regional banks, marijuana and clean energy. So Mexico. So it's the broad indexes globally that are getting slaughtered. There's only a few isolated cases of things resisting the sell-off. All right, that's everything I want to cover for today. We'll get this published and posted, and we shall be ready for Trader's Delight tomorrow.